Okay, so this is Alan Bonner, and I'm going to present paper 9609/12, February, March 27. So this is a Section A short answer paper, and it's asking us to answer all questions. So the first one, define the term markets research. The important aspect to that just is quite simple. Definition is all that is required, no explanation, just the definition of the term market research. Market research is a defined process of collecting and recording and analysis of data about customers, competitors, and the market, product, or service. This is simply that is required. The emphasis should be on the collecting and recording of data. 1B, briefly explain the limitations to a business of using secondary market research information. Important thing to remember here is the word secondary. Don't confuse it with, let's underline that word if we can. See if I can make this pen work. So sorry about this for a moment. Just get this all sorted out. So market research, definition is required. Explain the limitations to a business of using secondary market research information. The important point here is to recognize what secondary market research means. Primary, quite clearly, is direct, whereas secondary is indirect. Secondary is all about using other people's research that's already been completed. In other words, information that's already available. Primary research is direct and new and is probably going to be more beneficial in as much as it's going to be tailored to your own requirements. Question 2A, define the term working capital. Working capital, this is basically available finance. It is not costs, and this is sometimes a confusion when answering this. This is not about costs, this is available finance. It's the capital needed to pay for day-to-day running costs. For example, your raw materials, if you're a manufacturing business. The credit that's offered to customers is also capital. In accounting terms, working capital equals the current assets minus your current liabilities. To B, explain briefly the difference between revenue expenditure and capital expenditure. Revenue is your day-to-day money. Capital is the money that you probably have available for developing your business. Revenue expenditure is spending on all of your costs and assets other than your fixed assets. And it includes the things like wages, raw materials, maintenance, and maintenance of your fixed assets. Capital expenditure is spending on assets, so it's buying new machinery, new property, new vehicles. Of course, your capital expenditure will depreciate over time. Question 3. Explain why a mission statement might be important for a multinational business. The big confusion in previous students in answering this question is confusing a mission statement for business plan. It is not a business plan. A mission statement is a statement of the core business, identifying its purpose and focus of the organisation, and it's designed to resonate and be important to internal and external stakeholders. It's a rallying statement of intent. In a multinational business, mission statement might be used to communicate the philosophy and goals of the business to its many employees in different countries and locations. It would be used to direct and motivate those employees and to provide a reference point for national and corporate and departmental and section and cascading down to the individual. Multinational businesses, of course, need to have a mission statement so that it can actually help everybody within the business identify with one cause, one intent. Externally, it's very important as well, because obviously wanting to communicate the aspirations of the business in terms of customer and supplier and community relationships, it's important that all stakeholders can understand the intent of the business, the purpose of the business, and this is wrapped up in a mission statement. Question 4A, define the term economies of scale. Well, this is quite simple. It's quite clearly, again, it's a definition, which means it just needs to be a statement. It doesn't need to be expanded upon. It's when the costs of production fall and when the scale of operations increased. In other words, it's getting more out of what you've already got. So it's putting more product through a production line without increasing your costs. Again, I re-emphasize the fact that you just need to put the definition down. You don't need to explain it. So it is quite clearly it's when cost of production fall, the output increases. 4B, briefly explain 2 causes of diseconomies of scale. This is generally misunderstood. Diseconomies of scale is the exact opposite of economies of scale, and primarily can be laid at the door of poor communication, poor operational efficiencies, and poor coordination throughout the business. It's when the operational process becomes inefficient and it actually creates cost rather than saves cost. This understanding is the opposite of the economies of scale. Five A. Analyse the strengths and weaknesses of a public limited company and the legal structure of the business. Analyse the strengths and weaknesses of a public limited company, the legal structure for business. Well, things that might include here are a company that can sell shares to the general public on the stock exchange and has limited liability. Strength of that in terms, again, I would suggest that their business is a sizable business, therefore not a private limited company. It's public, so it has a wide stakeholder group. The strength, well, it's a legal entity in its own right. It has a persona of its own, and therefore individuals within it are limited in terms of their liability. The liability tends to be limited for the shareholders as well. It allows them to raise sums of capital. There's no limitation of number of shares you can issue. And the shares are bought and sold on the stock exchange, and therefore provides liquidity for shareholders. In other words, earning money for them. Being on the stock market, being a public limited company, it does provide a level of status. And as I say, it's likely to be a sizable business. It also gives the business an opportunity to have a high profile and therefore be able to make acquisitions. It also may find it easier to borrow money from banks. There are some tax advantages also. As I say, it's likely that the business is quite sizable. Therefore, it's likely to have complex legal formalities, which are costly and timely, and most businesses end up employing directly lawyers to help them through the complexities. There would be strict regulation and controls around the shareholders, the interest of shareholders, and therefore limited in terms of flexibility that you would find in a private company. They have to file accounts, of course, through Companies House, and therefore the control of the business may not always be with the owners. Indeed, very seldom is. There's always a risk, of course, that they could be taken over by other companies, and it's not them, not the business itself, that determines the value of the business. It is the stock market. So the financial markets determine the value, which is also sometimes quite frustrating. So there are some strengths and weaknesses of a public limited company. Like I say, it tends to be the larger businesses that would move in that direction, mainly to raise finance, I would suggest. 5B is an interesting one. Discuss how ethics may influence the decision of private sector banks. Well, I assume, and if you don't know, I'm going to tell you that you know what a private sector bank is. Private banking is a bank that offers services mainly to high net worth individuals, people with lots and lots of money. They're largely related to asset management. In other words, private banking institutions tend to assist net worth individuals in investing their money in exchange for a commission or fee. Private banking combines some services of brokerage with normal banking services. So, all intents and purposes, it's very much an investment for high value customers. It's important to note that high net worth individuals have some investment vehicles open to them that are prohibitively expensive for other investors. For example, hedge funding. In lots of cases, a private bank will only allow clients to, will only accept clients that have probably £50,000 or more to actually invest. And some banks, in fact, would suggest that you need at least £500,000. So that's a private bank definition of a private bank. So looking at how their ethics may influence, how ethics could be influenced by private bank is understanding that the business ethics may not apply to the environment, for example. The morality, the rights and wrongs of the business as perceived by the stakeholders. Business ethics is now part of the language of business, and customers demand more, and management is often trained to deliver more. It may mean additional costs. It may mean more monitoring and rules of accountability. May be seen as part of brand building. So in relation to the private sector, the willingness of a bank to take risks is probably higher. The level of discretion and freedom that they would have and give to employers is probably higher. The extent and significance of internal regulatory controls that prevent unethical behaviour. So without frameworks, ethical frameworks, expectations, and without a code of ethics, banks may engage in unethical behaviour over invest focused on high profit. Ethical behaviour often constrains banks and move them into fair and reasonable behaviour. So it's really interesting to work through the argument and discuss the place that ethics has with private sector banks, which tend to have more freedom, I would suggest. So moving on to question 6, Maslow's hierarchy of needs. Again, just to recap on what Maslow's theory of motivation is all about. It's a 5-stage model normally, and it's the base one is the biological needs, the basic needs of food, water, warmth, and rest, perhaps. The next level is safety. It's all about security. Security of your being, security of your family. The next level is all about belongingness and psychological needs, which is about intimate relationship, needing friends, needing partners. The next level is also psychological needs, but it's about a value, feeling, having a value personally, a feeling of self-worth, a feeling of accomplishment. And then the last one is self-actualization. It's all about achieving one's full potential, including creative activities. So that are 5 stages of Maslow's theory. And the question is asking you to discuss it. So good answers here will analyse those key features. It's important that you understand the strengths and weaknesses, and the strengths of the weaknesses of the Maslow motivational theory, and make evaluative comments and arguments directly relevant to the statement and the question. 7A, analyse the importance of the unique selling point to a mobile cell phone manufacturer. Well, the USB is obviously a unique selling point. how important is it for a phone manufacturer to have a unique selling point? Well, quite clearly, very important. And the unique selling point of an iPhone over a Samsung 8, for example. So the marketing aspect of a USP is very significant. Need to have product differentiation to gain a competitive advantage. The context of mobile phone business is the intense market competition. As I say, iPhone versus Apple versus Samsung. And developing that USP can be very expensive and create huge research. And it initially, when it's launched, needs a huge amount of sustained promotion. So it is important, very important, and a lot of time and attention would go into making sure that it's their product is a unique product, that they have something different from the competition. 7B, discuss how the retail business could improve customer relations. And the most important word in that question is how, not why, but how. How can they do? How can they improve their customer relationships? So concern for the customers should be considered, a customer focus, or in some cases, businesses have an obsession about customer service. Good customer care is so significant and obvious that it can, in actual fact, be a USP. How it could be improved? Well, recognize the difference that you have over other businesses is the way you look after your customer. Examine how your management deal with complaints, for example, how they manage and how do they lead. Is it customer focused? Making sure that your staff also are able to focus on the customer needs rather than their own needs. Improving lead times, waiting to be served in a shop, for example, making sure that you're dealt with politely and carefully. All these elements go into how you might improve customer relations. And of course, you'd want to do a survey to identify how well you're doing. So I think that covers those questions. I'm sorry that this broadcast has been a little bit disjointed. However, if there are any questions that you want to ask me, please contact me via Slack and I will do my best to give further explanation and perhaps answer some questions that you may have on a one-to-one. Again, apologies for a bit of a disjointed broadcast on this one.
this is a tip. So if you press this and then tab, you can tab through to, or you tab back to the PDF thing. Right? So stop the broadcast is the first